Today we are going to talk about a new IPO which has come in the block for subscription, which is RR Cable. What is RR Cable and whether we should invest it, and if we have to invest, whether we should invest it for short term, long term, or both, or we should really avoid this. Now, before taking this decision, let us understand what is RR Cable and its competitor landscape and how its financials are compared to some of its peers. The first question is what is RR cable? RR cable basically deals in two categories. One, first of all, it deals in wires and other such accessories which are really required both in residential as well as industries. So you in any house you would usually see RR cable as such. The other category in which it has paved its way, which contributes about 30% of its revenue, 70% from the wires and cabling, is FMEG, which is fast moving electrical goods. Now we have heard about FMCG, we have heard about FMCD, which is fast moving consumer goods, more consumption space products, fast moving consumer durables. This is what we learn new, which is FMEG as such, which deals with fans, lights, and others. And these products which they sell under the brand name Luminous. We have known Luminous; it is also a known brand as such. So it is a very well known brand in both of the categories in which it deals. Now coming to the IPO, whether what is the IPO, when it is starting tomorrow, which is September 13th till September 15th. While it is open, it is coming in two main categories for subscription. One is OFS and the other is fresh issue. You can invest in either or. There's no conditional asset, but as part of this, they are going to raise about 1900 crores for the OFS part and 180 crores for the fresh issue. Now, out of this 180 crores for the fresh issue, they are going to use 130 crores to pay off debt and other company related expenses for the rest amount. And for the rest, 1900 odd crores is going to be going to the investor, which is TPG Capital, the PE investor. Now, one thing to learn through this is how TPG Capital makes money. This is how these investors, we have seen Shark Tank where these investors invest money so that tomorrow when they sell, they get a bumper return. The holy grail of investing is this phase where they really are able to gain momentum and are able to make money through IPO. IPO is the holy grail where they can get money. So we have seen some of those IPOs like Paytm and others where the investors who had invested earlier had made money. Obvious retail investors, some of these were not fortunate enough as such. But here TPG Capital had invested 4 years before around 250 odd rupees per share, and today they are coming at an upper band of 1035 as such. Now this is a bumper return for TPG. TPG is going to go out, and some of the promoters are also going out with 2% stake. So they are selling just 2%, but good part is they will remain more than 60% even after diluting this as such. Now, what we need to see is what is the PE ratio compared to some of their peers. Some of their peers command a very good PE at which they are also coming. They are coming at an upper band of 1035, and some of their peers like Havels, Polycab, KEI Industries all have a higher PE ratio, which is in line to this, which is around 67 to 72, which is something which this company, which is RR Cable, is also having. So this is that table you can see where the P ratios of their competitors are being shown, and this is almost in competition to what RR Cable is asking. So RR Cable wants a PE ratio which is of the industry leaders. Now, whether it can really command this as such, we will get to know through their financials. Now, seeing their financials here, we see their revenue has grown from 2000 odd crores to 5000 odd 2800 odd crores to 5000 odd crores, whereas their PAT has increased just from 130 odd crores to 180 odd crores. So the growth in PAT hasn't been that in linear to the revenue. So that means that the margins, they have not been able to grow keep it in line with what they wanted. And one of the factors of such industry is their raw material. This is very important to understand when you understand from an industry perspective. The industry is very positive, for which we are very bullish. The company financials, if you see, one of the key factors is their cash in hand is very handsome, and their debt is only 500 crores, and out of this 180 they are going to proceed 130 towards this paying of 130 out of the 500, which will make their balance sheet much more better. So they say that over the period of 3 years where they are going to put in and bring in more 500 crore revenue, they will be able to invest through their internal accruals itself. So that is a very positive and very bullish term in terms of the company growth perspective going forward. Now, whether we should invest or not, seeing the competition, the PE is obviously large, but the investors are very, very solid. They have shown tremendous growth, and the industry is also growing very well. So we can think of investing it both from a short term as well as long term perspective, and in terms of the short term, the listing gains as such. Whether but before really investing, you should consult your investment advisor, as I am not a SEBI registered investor advisor as such. And if you liked and learned a lot through this video, please like and subscribe to this video. Thank you. Have a great day. Bhagwan.